Good Tuesday morning. I'm Yahoo Finance Executive Editor Brian Sozzi, and this is Opening Bid. So much to fire up, so little time. Let's get after it. Very busy. If you head over to the Yahoo Finance homepage on desktop or mobile right now, while of course still watching me on here, you will come away thinking this, I think. Damn, this is a tech-heavy market morning. Palantir dominating the trader talk, and who can blame them after another fun Alex Karp-led earnings call and another blowout quarter?
The bar at Palantir is not we're the best, it's that it's got to be magical. We're not in the business of delivering the best products. We're in the business of delivering magically projects that are magical on the front line.
Alex looking pretty jacked there in his white t-shirt. Here's what I like in this Palantir quarter. Jot this down because there is more than hype that drives Palantir stock. It's all about the fundamentals at this point in this company's life. First, bookings were up 130%. Very good. The company saw its highest revenue growth rate in about 10 years. Commercial sales growth accelerated sequentially. Government sales growth, you guessed it, accelerated sequentially. Full year sales guidance was almost $1 billion above consensus estimates. Operating margin and free cash flow guidance also well above consensus. Now, despite all of this Palantir bullishness, beat up software stocks like Salesforce and SAP are not trading higher in sympathy. The read is this. This is a Palantir specific growth story for now, I happen to think. On the other side of the tech headlines today is PayPal. The OG fintech name is seeing its stock get obliterated after missing on earnings and offering up an absolutely horrible outlook for this year. It's also punting its CEO Alex Chriss from the C-suite, bringing in its chair and current HP CEO Enrique Lores as CEO starting March. I caught up with Enrique this morning, and you can see what he told me on the screen. We're going to fire it up right here. You can look at it. You can read it. I will say this, though. Knowing Enrique, I would expect him to aggressively cut costs at PayPal quickly and lean into regaining market share at checkout. He has a battle on his hands, though, as PayPal is going up against the likes of Stripe, Affirm, Klarna, and many other fintech payment upstarts. So Enrique has a big job on his hands. He will not get a honeymoon period, I think. As icing on the cake for this big tech morning, I am still tracking this SpaceX merger with xAI and figuring out what it all could mean for Musk's Tesla. And news breaking moments ago that Disney has appointed Josh D'Amaro as its next CEO, replacing Bob Iger. I suspect my OB roundtable has a few thoughts on all of this madness. Tom Hayes, Great Hill Capital Chairman and Managing Member, alongside Yahoo Finance Senior Reporter Brooke DiPalma. Tom, coming into the show, I set it up. I want to talk some Palantir, but let's just start with the breaking news that we just got. Josh D'Amaro replacing OG CEO Bob Iger, the CEO of CEOs. Is this bullish for Disney shareholders, given how well he's done in the parks business?
Yeah, it is bullish. We own the stock. We were hoping for this because the parks and experiences have the highest return on invested capital of all of their business lines. So this is a guy who's made massive investments, got massive return on that invested capital over time, and is going to expand that with the cruise business, with the parks, with the reinvestment into innovation in the park. So we like this story. I think the story was a little tired because they were waiting for the succession announcement. The board read that and they delivered in spades, and I think this is positive for Disney on a go-forward basis.
You know what is also interesting, too, Brooke, here, that at least for right now, Dana Walden is staying in the business. They signed her to a big deal. I encourage everyone to go to sec.gov, pull up the filing on this Disney news, and you can see how much of I would argue, a retention bonus they have given to Dana Walden and a large annual bonus for Josh D'Amaro. I think it's $27 million stock grant annually, so big numbers here. But Brooke, this is a flare of what Disney chair James Gorman did at Morgan Stanley when he left there as CEO, really made sure that they had management continuity at the top.
Brian, I think that this just goes to show not only management continuity, but in addition to that, hopefully hoping here that this is a different story than when Bob Chapek joined the helm a few years ago that ultimately led to CEO Bob Iger coming back in 2022. There really is high expectations, a high bar set, but also a bit of a different landscape than what Bob had stepped into when he joined the helm, a number of years ago. Really, Josh is stepping into, as Tom alluded to, a business that is far different with their cruise line, with consumer business doing well, with the parks business doing well, really a standout in the quarter. But investors have been waiting for this. They have been ultimately thinking that Josh would be named. And so we are seeing the stock under a little bit of pressure this morning, down more than 1% as investors sort of digest that this is the case. This is going to be a Disney, the next generation under Josh, but also that Dana did not get the top job, but they're keeping her on. And it just goes to show the importance of what Disney's content and ultimately the brand will look like in a future with AI.
All right, let's keep moving here because I think, Tom, you have a lot to say on PayPal. I will add, I caught up with the incoming CEO of PayPal this morning, Enrique Lores. I've covered his entire career at HP, going back to 2019. And my take, Tom, is this. I think he's going to lean hard initially on cost cuts, driving better margins, because it is going to be hard to turn around that branded checkout experience in an era of Affirm, Klarna, Stripe, and 50 other fintech companies I'm failing to mention right now because it's still early in the morning.
Yeah, I think, look, when you have free cash flow, you have a lot of options. I immediately went to his history. He was at HPQ since 2011. The low price of the stock since he was there was $3 in 2012. The high price was $37 just about a year ago. From the time he became CEO, he was elevated to that position in 2019. The low of the stock was $10. It went up to $37. Here's the big thing. HPQ, when you think about it, you say, wow, that is a boring business with little innovation. And yet they were able to have a 10-bagger over a decade. How did they do that? Well, they did exactly what PayPal needs, which is they took a boring business that wasn't innovating and they reduced the share count, get this, from 2 billion shares outstanding in 2012 to 953 million shares today. So basically, if you had a slice of the pie in 2012, your pie got twice as big, more than twice as big, without putting one more dollar of cash. They continue to buy cash. They continue to generate cash. They continue to buy in the stock. Well, now, how does that compare to PayPal? Well, PayPal is generating $6 billion of free cash flow. You would have thought today, based on the response this morning, that they generated negative free cash flow and sales were down 20%. And that's simply not the case. Total payment volume was up 9%. Revenues were up 4%. Operating margins were up 19 basis points. EPS was up 38%. And they guided, not only are we going to generate $6 billion of free cash flow again in 2026, we're going to buy in another $6 billion in stock, which basically means at this morning's valuation, they're going to buy in 15% of the company over the next 12 months, and you can't give the stock away. So that'll be the case. People will be puking in the hole this morning, and guess who will be buying it in the next few days after the blackout period ends? The weak sisters will be selling, PayPal will be buying, and the story will go on. And Enrique Lores, I think, is the right person at the right time. I do think, look, Alex Christ did do a lot of partnerships. He did create a lot of things. He was trying. I think it's going to be very much like Gelsinger. Gelsinger did a lot of the work to get the fabs going. The board got tired of waiting. They brought in Lip Bhutan, which was a good decision. Lip Bhutan walked across the goal line from the 10-yard line and spiked the football, even though Gelsinger laid a lot of the foundation. I think it's going to be similar for Enrique Lores. I think Alex Christ did lay a lot of the foundation. He did try to do a lot of positive things. The board got tired. Enrique Lores is going to spike the football. And when you have $14 billion of cash on the balance sheet, you got $6 billion of free cash flow, you got a lot of options. And even if you can't innovate, you can just buy in the whole company over the next few years, and the stock will go up on an EPS basis on that basis alone. And God forbid he actually innovates or some of these initiatives actually work, which on the early signs, they're okay. The guidance is not ideal. The market hates the guidance. The market hates the uncertainty of a new CEO. But math is still math. And we continue. We own the stock. I can tell you we're not going to be a seller. I can't tell you what we are going to be in the next few days. But look, it's a detour. It's not ideal. And I think you remember this a little bit, Brian. You've known me for a while. We went through this exact same thing in Alibaba It was a huge free cash flow generated. It was the most hated sector a couple of years ago, and we made a fortune on it. So yeah, you got to deal with the short-term volatility, but if they're generating free cash flow and they're buying in shares, and God forbid they catch a little innovation and a little bit of break, you got real upside here. So not ideal, but math is still math, and we remain sanguine.
Brooke, top that analysis by Tom. That's why we have this guy on, because he shows up prepared. He's not mailing it in.
that was wonderful, Tom.
And you gotta burden yourself with the facts, and that's what we're trying to do this morning. Leave the emotion out of it. The short-term noise is not ideal, but the long-term prospects and the optionality is something that we're confident in. It. We were a little surprised by Enrique Lores, and then we saw their game plan at HPQ, which you want to talk about lack of innovation, and they still made it work because they put that free cash flow to good work and buying in stock.
Brooke, you're a big Venmo user, right?
PayPal. And I think the innovation is also going to kick in on top of it.
Brooke, you use Venmo, right?
Yeah, and well, I was just going to say, Brian, I know that we were chatting about this earlier this morning, but really the acquisition, or rather the creation thereof of Venmo, was really so significant for PayPal, but the lack of awareness on Main Street that PayPal owns Venmo, that it is all one company, definitely something that will be a huge opportunity for Enrique to capitalize on.
All right, we're going short here. 30 seconds and 30 seconds. Tom, are you a buyer or seller on Palantir? Giant quarter. I still think the stock is misunderstood because nobody's reading the financial statements.
Misunderstood in what way? Well, let me say
No, they
this.
just think it's hype, Tom. They just think, Palantir, it's hype. There's no fundamentals behind it. This company's crushing it.
Look, the fundamentals are the fundamentals. Their revenues are up 70% year on year. The adjusted EPS is up 79%. Their guidance, they're guiding for 7.2 billion in revenues in 2026, which will be up 61%. So all that is great news, but price is what you pay, value is what you get. So if all that stuff happens, you're still paying 100 times free cash flow. You're still paying 158 times forward multiple. And you could say, okay, this time's different. It's going to continue to grow, and therefore the super high multiple is justified. And I would say maybe that's true. But if they miss by 1 or 2%, the stock, doesn't go down 10%. It goes down, like silver went down on Friday, chasing shiny objects. Look, I hope it absolutely works for them. But at these valuations, you have very little margin of safety. And there was a great company like this about 25 years ago. The name was called Amazon.com in 2000, and they promised all these crazy things. We're going to be the store of everything. We're going to deliver to your house. We're going to get into the computer business, blah, 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 blah. They did all of that and more beyond what they promised in 2000. The problem was, in the interim, you had this little 90% drawdown because you were already paying for 30 years of great execution all up front in 2000, and it corrected. They delivered everything they said they were going to do, and 15 years later, the stock was at new all-time highs. So, you could have a situation like that, or you could have a tree that grows to the sky and it continues to deliver and it continues to command the high valuation. And that's something you have at these type of multiples. You gotta know that you're making that bet, and if you're making that bet, just know what you're in and why you're doing it. And it's a momentum trade, not a mathematical trade.
All right, we're gonna have to leave it there, friends. Awesome analysis on a big morning. Appreciate it. Thanks for hopping on the OB Roundtable. Hot AI named Snowflake inking a huge deal with OpenAI. The company's CEO gives me the details next and defends the beat-up AI software stock trade. Software stocks have been hammered out of the gate this year, really across the board. One big fear is behind it all, and it's essentially being carried over from last year. It's that fast-moving AI will kill off software companies over time. Interestingly, none of this has been proven out in the financials of software companies. Earnings have been strong. Same goes for outlooks. Just look at Palantir. And many software companies are innovating at a pace like never before to capture opportunities with AI. Again, just look over at Palantir. Another one of these companies is Snowflake. The company has announced an important new $200 million deal with OpenAI to bring their state-of-the-art models directly to Snowflake's platform. Recall that in December, Snowflake signed a similar deal with Anthropic valued at $200 million. Snowflake also revealing another new product called Cortex Code, which is a fancy way of saying it's an AI coding agent. Snowflake CEO Sridhar Ramaswamy caught up with me on all this.
We're announcing something called Cortex Code, which is a coding agent that is specialized to data. What that means is it understands Snowflake intimately, all its different capabilities, what you need to do with everything from how you ingest data to data pipelines, to creating new applications and also creating AI agents. It brings the power of AI to automating many of these tasks, and it's been remarkable. We are seeing productivity gains of 5 to 10 times in getting jobs done. And customers like Whoop, which are early deployers of Cortex Code, that's the name of the product, absolutely love it. Obviously, there are many coding agents, but having one that understands data, that is specialized to Snowflake, understands all of its capabilities, and is natively integrated is a game changer. So much so that I, a CEO, can take a screenshot of an app, put it into Coco, that's what we call it internally, and have a Streamlit or a React app come out in a couple of minutes. It's a total game changer for us.
Sridhar, how does this change the business of coding?
Well, it enables people to get a lot more done faster. I think they can operate at a higher plane, data analyst, rather than write SQL. They create these things called semantic views, which you can think of as descriptions of data. That means that more business users can get access to this data using products like Snowflake Intelligence. Also, debugging, figuring out where problems are just got a whole lot easier thanks to the insight that tools like Coco bring. It just makes everything go faster. And honestly, I think creates more opportunities for all of us.
A lot of focus, and if you and I were having this conversation a year ago, still I would probably ask the same question, but more focus on how tech companies are monetizing AI. How does this new product, which sure makes a hell of a lot of sense to me, how do you sell a product like this?
First of all, it is a consumption product, meaning that when a Snowflake customer uses it, they just get charged consumption. In other words, there's not a huge upfront commitment for the product. And they can see the very clear return from how quickly their teams are able to get stuff done. I'll give you concrete examples. Our own support team adopted Coco to change their entire support pipeline. And what that meant in practice is that problems that would honestly take 5 hours to debug, Coco is able to debug them in a matter of 15 to 20 minutes using a set of specialized skills that they develop. I think it is that kind of productivity gain that are going to happen in every aspect of the data lifecycle. And we absolutely are going to help people do more, integrate with AWS, integrate with other systems like Airflow. We really want this to be the tool using which to get work done in the world of data.
I mean, this is amazing technology, and it's moving so fast. So what's the role of humans?
Humans exercise judgment. Humans have the context for how things should be done. You can identify what problem there is, but ultimately how you fix the problem is something that the human exercises judgment on. And I'm one of those people that always wants to make sure that this coding agent, even Coco, is doing the right thing. I think judgment will continue to be an important factor, reviewing the work, make sure that it's going well. Figuring out higher levels of abstraction is also going to be important so that you can develop these reusable components called skills that other people within your team can develop. I think it elevates the human role and takes away a lot of the drudgery that just makes getting work done so much more difficult.
The other component to the news that you're coming out with is you're inking a new partnership with OpenAI. What is it exactly, and what's the value to Snowflake?
We've always said, Brian, that there is no AI strategy without a data strategy. And this partnership represents a next logical step in an amazing AI company like OpenAI working closely with Snowflake. Yes, the $200 million is a commitment to spend on OpenAI models. Obviously, it's a big deal for us. That's a fairly substantial amount. But on the other hand, what this also means is that we are going to be collaborating closely to create AI products that deliver value. Customers like Canva, who are big customers of both OpenAI as well as Snowflake, are going to benefit from us working closely together. I think there are a lot of products that are going to create value in the enterprise, and the two companies working together, doing go-to-market together, is what is going to unlock that value.
You announced, I believe it was in December, a deal, $200 million deal with Anthropic. Why are working with Anthropic and an AI so important? And is it, I imagine you don't see one model winning out over time.
Well, these are the marquee model makers in the world. We continue to have a very healthy relationship with Anthropic. And they all have their specialties. And much more importantly, our customers want choice in the models that they use. I think of these as really important partnerships for us as a data platform. It's the combination of data platform plus the AI provider working together that's going to unlock enterprise value.
This has been a bit of a weird start to the year, Sridhar. Software stocks have really gotten hit, but companies like yours are still out here putting up good financial results. The outlooks have been strong. Like, where's the disconnect, you think?
Well, data platforms are also a little bit different from pure software stocks. And I think the data layer will continue to rise in importance. As you know, we bought an observability company called Observe. And the idea is to provide that kind of capability natively within the platform. Yes, these kinds of coding agents, things like Cortex Code, will make application development easier. But I think there will be durable value in big software providers as well. So I think the effect is a little bit overblown, but we feel very good about where we are because the data platform is the key to helping enterprises unlock value. And us working together with OpenAI and Anthropic feeds into that equation.
It's still, I mean, do you view it as just, I mean, it's hard to believe like big companies like a Salesforce, these SAP, ServiceNow, they go away. But you look at some of the market reactions, that's what the market is saying. It almost doesn't make any sense to me.
Well, there are market reactions. And as you know, market reactions change over time. I do think that this is a time of unprecedented change where the ability to develop new applications is easier than ever before. As I said, I can create React, different kinds of dashboards just by speaking, asking questions or asking requests in natural language. I think that is the thing that people are trying to project out. But as I said, I feel good about our ability to provide value to customers as that one data layer that bridges everything. Don't get me wrong, we have great partnerships with the likes of SAP and Salesforce. We just announced a big partnership with SAP where we can bring the power of Snowflake, the AI data cloud, on top of SAP data. We will continue to work with these companies to create the next generation of agentic applications that you and I and everyone else in the world will end up using.
I was reflecting back, Sridhar, to when you and I talked. I think it was January 2025. It was around the time of the DeepSeek announcement. I mean, it surprised the market, but it was a moment of really amazing innovation. And 2025 was just an absolutely tremendous period for AI. 2026, how do you think AI will be defined? What's the big breakthrough next that's coming?
It's value delivery. As I said, what I am doing with Snowflake itself, with things like the support product that I was talking about, is being able to have the team be a lot more effective dealing with large volumes. Just before this, I was meeting with my SRE team, which you can think of as my operations team, talking about how they can use Cortex Code to make things like problem diagnosis go a whole lot faster. I think it is all going to be about value creation in rolling out these kinds of agents for real enterprise use cases. I always tell people there are only two things that matter in an enterprise: being able to make more revenue, being able to spend less money. I think we are going to see huge impact from Snowflake customers using products like Snowflake Intelligence and Cortex Code to deliver that value.
Best CEO background of the week so far goes to Sridhar. Appreciate it. Good to see him. All right, you aren't done with me just yet. I'm back live in the 3 p.m. hour for a big interview with PepsiCo CEO Ramon Laguarta. Company's earnings out this morning hit a lot of the right notes. Earnings beat estimates, sales in each division beat estimates. The company reiterated top and bottom line outlooks. It served up in December a lot of boxes, and it promised to cut snack prices, notably on Doritos. I even like Pepsi is poking some fun at rival Coca-Cola in its new Super Bowl ad that just dropped. I'll get into it all and maybe a lot more, and I'll probably unveil my Super Bowl pick in the 3 p.m. hour. I know you're pumped up about that one. Julie Hyman has you next.